Hello and welcome back to Bunnex Investment Group. Today we are going to be talking about order blocks, which is a topic that has been trending all over the internet for a while, and several subscribers have been coming to request for that video, and I've decided to um, make this masterclass on that topic. But before we jump into the whole video, make sure you hit that subscribe button and the notification bell icon so that you'll be notified each and every time a new video is uploaded. So if you have been following this channel for a while, you know that we use the market maker method, or basically the MMM, and this is where we derive our trades. And I'm not saying if you use the market maker method you also need to use order blocks, but if you find order blocks easier to understand, you can actually incorporate them in the market maker concepts that you know. Please check out our free Telegram channel as well, where we share free signals, trading support, as well as advice. So without wasting much of your time, let's first define what an order block is. So basically an order block is just a region that we derive from market structure. So if the market is going down, this is what we would expect to see: lower highs, lower lows, lower highs, lower lows in a downward trending market. So these lower highs and lower lows are where we actually derive the order blocks. So the derivation of order blocks differ from a trader to a trader, and the concept of using this institutional concept is different from person to person. So from the context that I made my research, as well as what I apply whenever I see levels being filtered to see, I actually use order blocks derived from the last candlestick of the market flow. So by last candlestick of the market flow, we just mean after the market is given a flow, it usually gives the last candlestick at this point. So that last candlestick, the body of that last candlestick, is where I would derive this zone that I term the order block. So to make use of this zone, I would wait to see the market to come back in that zone. So when it comes back in that zone, I need to see rejection candles. That's wicks showing that in this case, buyers are now in exhaustion phase. So in an upward trend, the flow will be like this, creating the higher high, then probably the lower high. So this is the point that I wait for to get violated. So if the market violates this point, and in this case violating my order block, I would wait to see the market come back to that order block and show exhaustion or rejection. So basically the steps to actually draw or construct useful order blocks is to first find the market structure. Are we trending down or are we trending up? After that, we need to look for the last candlestick of the flow in that market structure. After finding that last candlestick in that market flow, we now need to see violation of that zone of the last candlestick in that flow. And after violation, we need to see the market come back to retest that zone we term the order block. Then in that zone, we need to see rejection or exhaustion of either buyers or sellers and take a trade right away. So this is actually something that is accurate if you follow it religiously, and if you follow it with discipline and patience. It only needs you to be consistent on these parameters. So let's jump over the charts so that we may have one or two examples illustrating what we've just said. So this is pound against dollar, and we want to illustrate the order blocks and how we could actually make use of them. So this was the lowest point, and this is on the H1 time frame. From the lowest point, we can see that we had a flow, a pullback, and then a flow. From this point, we can see that this one was the last candlestick. So the marking of order blocks is to mark the upper and lower parts of the body of the candlestick. Unfortunately, I won't be able to go down to zoom in this candlestick. So as you can see, we had this order block, we violated the zone of the order block, and what we were now doing was to wait for the price to give us some rejection in this zone for us to go long. Then we had a flow of the market. After that flow of the market, we had the last candlestick, which is this one, right? Let's mark the zone of the last candlestick. This was the zone of the last candlestick, and then we violated that zone. After violation of that zone, we then retested. So this retest was also valid for us to go long, and this one we retested this order block. Then after that, the last candlestick in this flow was this one, which could actually allow us to make the order block, right? And we must first wait to see violation of that zone. So the market came down, it retested, we could actually enter long, and after that the market actually broke this zone, which was the order block we constructed using the last candlestick in this flow, and the market gave the first retest, and after that it gave another retest. However, we also had another last candlestick, right, in the flow, which could also allow us to make another order block. So we were at this point, we actually anticipated to see the market giving us rejection in this zone. The rejection was given above the order block. So this is now upon the state of the trader. Are you an aggressive trader to take a long if something like this occurs? So this was actually a rejection candlestick, and the market went up. Then after that, we can see that we had the last candlestick at this point, right? In this flow here, we had the last candlestick, and on that last candlestick, we were also waiting to see violation of this zone. So let's construct the order block. We're waiting to see violation of this zone. However, the market did not violate, and I usually do not recommend to trade retest of the order blocks in this case. Those ones that violate and retest are the ones that are of good quality. Then we had the last candlestick in this downward flow and its violation. So from that, we could actually enter, sell in any of these points since they were rejection candlesticks. So what are we now waiting for to see in this pair? We can see that in this case we had the last candlestick at this point, right? The market went up and it was violated, and we can see that this was also a point that we could go short. So in doing this, you can as well incorporate levels, and if you incorporate levels, it will become a robust system. So I'm not saying throw away what you know, and on this channel we share a lot of strategies. It's not for you to actually use all of them, but to find the ones that actually works best for you. On that note, we come to the end of this video. Like and subscribe and share with someone, and do not forget to check out our free Telegram channel. The link is right in the description below.